Good afternoon. Time to wrap it up for this May the 6th, 2015. We came in this morning wanting to be sellers in the E-mini. We thought 95 to the buck was going to be the top. So we had a 94.96 sell. The high is 93.75. This is an exhaustion bar. And this was the trade of the day, really. Just sell stopping into that to retest the night session low. So our high was set a little bit high. Our sell was a little bit higher than the overnight session highs, with the idea that they get stops above that. Retest failure trade right here. So this was that was a huge trade. This trade right here, if you'd taken it as a retest failure trade, produced a winner. This buy could have been anywhere from a scratch to a loss. Retest failure, winner, sell, winner. You're already in that trade. That doesn't count. B, a small winner, mean green, which is a trade that was not good to us in April at all. We had a little rollover here, 4 tests of that. It wasn't rejection, so breaking that low right there was a good trade. Then it peels off. Another winner. Retest failure right here. Another winner. S, another winner. These two S's, another winner. In fact, this buy right here off that higher low, that's a legitimate trade, was a small winner. So this is really, really a big day trading the E-mini. The idea and the level to start off to be short to see if we could take out the overnight session low was correct. It did produce a very, very nice day for those of you that took the trades. Looking at the F1 screen, and I think what's really unique about what's going on this is the second day in a row of selling. Imagine that. I mean, there was only like 2 or 3 times last fall where we got that second or third day of selling. And this year, I don't think we've had 2 days of a row of selling after January. So this is unusual, and it was because Janet Yellen basically this morning came and said the stock market's overvalued. So here we are. We have stronger than forecast economic news yesterday. The market breaks. Yellen comes in and says that the stock market is overvalued, and we had economic news that yesterday would have taken the market higher, but today it takes it lower. So this chart trading off of this lower high, lower low tells us we're a seller tomorrow. At the F2 screen, a couple of distributions down. Definitely have a B. You can see we've got time right here. That's the point of control. We've got volume right here. That's beneath that. That tells us to sell. Got to move out of the middle. And in this one, we've got volume above time. We said that 67.72 was probably better support. If we got through that, then it's 59, then 50, then 40, 44. And you can see how the high volume numbers attract. And if you take out a low volume number, you get to the next high volume number. Low volume numbers really are support and resistance. And you do have to pay attention to them. So let me slide this up. Looking at the distribution, 70 is resistance. We're at 63.75. Last rotate up to 67. So I think the easiest trade to see is failure to take out 65 to 70. And the next trade is going to be 74.76. On the buy side, we're going to make it 59 to 61, playing this high volume number right here as the attractor. Then we're going to go down to 50 to 52. Going to lean against a round number. Now, I'm not getting super enthusiastic over the selling and that's come in. I'm not really getting all that excited about it because it's really been tough to see the market that would consistently sell. But with Yellen's comments this morning, she encouraged several other people to come in and get short, so we may have a shot at follow-through selling tomorrow. We do have news tomorrow. Jobless claims at 280,000. That's kind of the default number. You have Challenger job cuts, Gallup payroll to population, and Bloomer consumer confidence. None of that news is likely to come in supportive. Best thing we have going tomorrow for us will be the jobless claims number. Then after the first move is over tomorrow, we've got Friday's non-farm payroll numbers. And put an interesting article into the room. It's in the chat box about how those numbers are. John Crudell, and he said he'd have another article tomorrow for us on how the Bureau of Labor Statistics actually computes those numbers. It's pretty interesting, and it's just no one can't believe, or people don't put a hell of a lot of faith in the numbers as being for real or faux real. Lower high, lower low, seller. Now, these guys know the economy better than anybody. So interest rate increase, deflator, showing inflation is in the market, or the economy is going to make a comeback in the second quarter, leading to an interest rate increase. I mean, I don't know which one it is, but I would say deflation really has been off the table for a long time if you looked at food and energy costs, and with a comeback in crude oil, some, what, $22 off of its lows, the deflation argument becomes a little more difficult to make. Looking at our F2 screen, we're lower. Volume is moving lower. We're still looking at a hellacious B. Here's the break in the market right there. It's 27.16 to 20 area, and that's the area we liked this morning. We had an 11 to 15 sell, and then we had a 19 to 23 sell, and we said the best resistance was at 16 to 20. I thought there was pretty good support at 27 to 04, so we had a 5 to 1 buy, and in Y period right there, it did give you a good trade. The 11 to 15, you had 1, 2. You had what, 2 hours, 2.5 hours to pull that trade off to the short side. This is a double distribution down. You do a C split. And right now, 7 to 11 would be sell 1. And then 15 to 19 would be sell 2. We're at 5 right now, so 29 to 1 will be buy 1. And if the E-mini crashes late this afternoon, we're going to have to probably pay, 4s or better to get in. And then 21 to 25 for buy 2. Okay, the knob spread is below 27. I mean, that thing has been whacked. The opportunity when the market sells or buys is in the 30-year. It's not in the note. For most players, the note is same thing. You just have to trade a couple more than 2 contracts. But what we have going in the downside and the upside is the expansion and contraction of the knob spread, and that adds to volatility in the 30-year. And that's what makes it more attractive than the 10-year. In a quiet sideways market where there's nothing going on, the knob spread is stable. 2 10-years will get you the same action or results as 1 30-year. But when the market is moving, the 30-year, because the expansion and contraction of the knob spread, will pay you more. Learn the game with the 10-year. Take that knowledge into the 30-year. Okay, resistance 16 to 20. Pretty much the same thing. That's our first sell. Then the spill was from 24, so 23 to 27 is sell 2. On the buy side, I want to make it 1 to 5. It's been pretty easy to get to the buy side. And then we'll make it 25 to 21 if we happen to break the buck. But there's a couple of things going for the 30-year that make it a different contract. One is the tick size, and it's 31.25. That's the biggest tick out there. And what it means is that when people put those trades on, they tend to hold them a little bit more. There's more at stake, whereas, you know, it's 15.62 per tick in the 10-year. Pretty easy to change your mind for 20 bucks or less. But just that, you know, that extra 15.62 complicates the decisions for most people. And the financials, gold and the euro, tend to trade fundamentals more consistently than the E-mini and crude do. Gold, market is trying to sell. We've got a seller 95 to the buck. We have had a buyer 80 to 85. 85 to 90, and that's where we are right now. So buy one's 85, 87. Laramie may not have killed the world's biggest hog today, but he did pretty well, just off standard setups. And what you got going in gold and crude is you got that extra volatility. Every time you put on a trade in gold and crude, there's 40 to 50 ticks potential, and that's pretty hard to beat. Okay, last rotate up is 91. We're essentially there right now, so we'll make 93, 95, sell 1. 97 the buck, sell 2. And if we don't get a big movement early in the session, then I think all our markets tomorrow will be on hold for Friday's numbers. If y'all haven't followed this John Crudell that writes for the New York Post, his insights into the economic numbers and how they're computed, he's a worthwhile read if you are so inclined. If you don't want to be bothered with that kind of detail, and then you may pass. Okay, crude. A lot of people are attributing the very, very strong rally in crude to a short squeeze. And if you come back and take a look at this chart, 66 down to, what, 63.50, this should be where we find some pretty major resistance. We came from 108 down to 40, so that's $70. 35 off the low at 40 takes us to 65. That'd be 50% retracement right here. So if we get up and we can't get through 50% retracement, this market we're probably experiencing a very violent short covering rally. Higher low, higher high tells us to look for a place to buy it. 60. This breakout from 60 is the logical point. If you come back down and crack 60 and it starts back up, you'll want to be long. Take this YZ out. And the split is D. And that's quite a distribution. So when my eye is quickly taken to this level, 61.15, 61.25, L period high at 61, so 61, 61.25, S1. I've got this low right here in B periods, and then 50 to 75 will be sell 2. I think our 60, 60 and a quarter is a pretty good place for buy 1, and 59.50 plus or minus for buy 2. But I think the battle will be fought at 60, and if we can't crack 60, then we should get a retest of the 61.5, 62 area. And last but not least, the euro, and I think we need to go to the F1 screen on the euro also. Got this high volume number that we talked about where the draw was, and we did make that plus a little bit. So we've got volume right here. We've got this high that started the selling that took us down to, I think, 104.75. And so we've gotten pretty high into this. If we're able to turn 113.50 from resistance into support, then pretty comfortable that the low is in until there's another major piece of news. Higher low, higher high tells us to be on the buy side early, but I think if there is no announcement tomorrow on what's going to go on in Greece, that the next drop-dead date's going to be May the 12th. We'll have to wait for that. And these politicians are really, what's happening right now out of Brussels, out of the European Central Bank, is the can is being kicked down the road. I don't think so, Jeff. I think that, the talk a couple of years ago were 2 euros, one for Northern Europe, those that save their money, and one for Southern Europe. I don't know, but it's an unworkable deal over time, and when Germany gets tired of spending money to keep it going, it'll be over. So 75, sell 1, 114 even, sell 2. The breakout came from 1,300. So our 20 to 30, let them get stops beneath that. Buy 1. And then buy 2 will be down in the 1290, 113 even area. I know that, most people that look at it have always said it was mission impossible. But there are so many politicians and bureaucrats that have a vested interest in keeping it going. It's hard to see them going quietly into the night and saying, well, that was it. It was a failed experiment. We're out of here. Do politicians ever admit to making a mistake? Patrick Moynihan, 50 years ago, told what was going to happen in our large American cities with our welfare cradle-to-grave programs, and he was right, but the solution is to pour more money into it, to have more fatherless families, to have worse schools. So it's hard to see how these things ever resolve themselves neatly or peacefully, for that matter. Y'all have a great evening. Welcome back, Alex. We'll see y'all bright and early in the morning, 6:45 a.m. Central Daylight Time. I'm out of here.